Hello, I'm Edward Sterling, macro analyst for Bulwark Bullion. Gold's recent price action has confused a lot of investors. Over the past several weeks, the metal has swung violently, falling sharply from earlier highs and then rebounding as geopolitical tensions and dip buying return to the market. But beneath that volatility, something more interesting may be forming. Because if the next phase of the gold bull market begins, there's a good chance silver won't be far behind. And historically, when silver finally joins a gold rally, the move can accelerate very quickly. Let's walk through what's actually happening. Gold has already had a massive run over the past year. Prices surged to extraordinary levels earlier this year, fueled by strong safe haven demand, geopolitical uncertainty, and heavy central bank buying. But the rally hasn't been smooth. During March alone, gold experienced a sharp correction, at one point dropping roughly 16 to 17% from recent highs before rebounding again as tensions in global markets pushed investors back into the metal. So investors are looking at the price swings and asking a simple question. Is the gold rally over? Or is this just a pause before the next move higher? Because if gold does begin another leg upward, history suggests something important tends to happen next. Silver usually follows. The most important force to watch right now isn't retail demand, it's institutional allocation. The first phase of this gold bull market was largely driven by central banks, which have been accumulating enormous amounts of gold annually as geopolitical tensions rise and countries diversify reserves away from the dollar. That buying helped push gold to record levels. But the next phase of the cycle tends to look different. Instead of central banks, the big driver often becomes institutional portfolio flows. Pension funds, insurance companies, and large asset managers gradually increasing their allocation to gold. And here's the key point. Even a small shift in allocation from these institutions can move the gold market dramatically. Why? Because gold is actually a relatively small asset class compared with global bond and equity markets. So if large pools of capital decide they want just a little more exposure to gold, the inflows can become significant very quickly. And when that happens, silver often starts moving too. There are a few additional forces reinforcing this potential setup. First is the macro environment. Energy prices have been climbing again in recent months, and inflation risks haven't fully disappeared from the global economy. At the same time, real interest rates remain uncertain as markets debate how long central banks will keep policy restrictive. That uncertainty tends to support precious metals. Second is market psychology. Early in precious metal cycles, investors tend to focus on gold first. Gold is viewed primarily as a monetary asset, a hedge against inflation, currency instability, or geopolitical risk. Silver, by contrast, sits in a different category. It's both a precious metal and an industrial commodity, which means it usually lags gold in the early stages of a bull market. But once investment demand expands beyond defensive hedging, silver often accelerates. The chain reaction usually works like this. Institutional capital begins increasing allocations to gold. That drives gold prices higher. As gold rallies, investor confidence in the broader precious metals complex improves. Retail investors, commodity funds, and momentum traders then begin rotating into silver. And because the silver market is much smaller than gold, those inflows can push prices significantly higher in a relatively short period of time. Gold goes first, silver goes second, and silver often moves faster. Before we go further, if you're enjoying this breakdown of the precious metals market, Make sure to hit the like button and subscribe to the channel. There's another piece of the puzzle that could matter if silver begins to rally again. Supply. Unlike gold, which is primarily held as a monetary asset, silver has substantial industrial demand. It's used in electronics, solar panels, data infrastructure, and a wide range of industrial applications. That means when investment demand rises at the same time industrial demand remains strong, the silver market can tighten quickly. In other words, silver doesn't need massive investment flows to move dramatically. Sometimes it just needs a shift in sentiment. Of course, there are still macro forces that could complicate this picture. Two of the biggest are real interest rates and the US dollar. When real yields rise sharply, precious metals often struggle because investors can earn higher returns in interest-bearing assets. Similarly, a stronger dollar can pressure metals since they are priced globally in dollars. So if Treasury yields continue climbing or the dollar strengthens significantly, that could slow the next phase of the rally. But if yields stabilize or begin drifting lower again, that could remove one of the main headwinds metals have faced. So what indicators should investors pay attention to next? A few stand out. First, institutional flows into gold ETFs. If large asset managers begin increasing allocations, that could signal the next phase of the bull market. Second, real yields on the 10-year Treasury. If real yields start falling again, the macro environment becomes much more supportive for precious metals. Third, the gold-silver ratio. When gold rallies strongly while silver lags, the ratio tends to widen, but historically that gap often narrows once silver joins the move. And that narrowing can happen quickly. The key point here is that precious metals bull markets rarely move in a straight line. They usually unfold in phases. First comes central bank accumulation. Then institutional capital begins entering the market. And finally, broader investment demand expands across the entire metals complex. If that second phase is starting to develop now, silver may not stay quiet for long. If institutional investors begin allocating more capital to gold over the next year, could silver be setting up for the next explosive move in the precious metals market? Thanks for watching. If you're interested in gold, silver, and the macro forces driving global markets, make sure to like the video and subscribe. For more analysis, visit bulwarkbullion.com. I'm Edward Sterling, macro analyst for Bulwark Bullion. See you in the next one.